All right, so again, this is crazy to look at. Like this stuff literally blew my mind when I first saw this. So let me go through an example. Let me put some numbers behind the story so you can see exactly what I mean and how great it is to focus on saving the increases of your income. So now, right now, I'm going to take out investments out of this whole equation. I'm not going to talk about investing. I'm going to actually show a 0% rate of return of investments. We're just going to look at the amount of cash flow that someone is going to save over a 25-year period. Now, if they make $100,000 and they spend $80,000, that means that $20,000 a year is what they're saving, right? It's that gap. The $80,000 is the taxes, the insurance, the fun trips to different countries, whatever that they spend money on, that $80,000. And so that $20,000 of income that's being saved, that's being put towards their long-term plan, if you go out 25 years, that means if you do some really easy 20,000 times 25 years is roughly about 500,000. That's the amount of cash that they would have been made by them and then put into an account or a 401k or a real estate or a business, whatever, right? There's multiple places you can put your savings. Now, obviously, this isn't reality, right? Because you get increases in your pay over time. You're not going to make $100,000 at the same place for 25 years and never get a pay raise. At least I hope you don't. So if I take the $100,000 and I put a 5% growth rate on it, okay, just some years it's 10, some years it's 2, right? Let's just go with 5 conceptually. And then what happens is most people, as their income increases, their expenses will follow that increase. And so their lifestyles will get better and better over time. And when your income increases and your expenses increase at the same pace, you're going to have more than 500,000. You're going to be able to save more than that because that gap gets wider and wider. The number of money, the number of dollars that are being put away gets more and more over time. And so instead of 500,000, this person was able to put away $954,000, right? So there's an increase there. That's really impactful, right? That's really cool to know that, okay, well, even though you're not a millionaire right now, there is a potential to be a millionaire in the future. If I were to just make one slight change, this is what I'm talking about. This is the tip today. If I were to make a slight change and just save more over time relative to the increases of my income, if I control the amount of money that I spend and not let it grow as fast as the amount of money that I make, then whenever I hit this button right here, it's going to recalculate to show us the amount of money that this person was able to put away. Wasn't 500, wasn't 900, it was 1.8 million. In other words, this person became a millionaire without investing any money because I'm not putting any investment growth on any of these dollars. This is just pure savings out of pocket. This person became a millionaire about, it looks like 6 years before that other person. And over the following 6 years was able to build almost double the amount of assets if they just put the cash underneath their mattress. They didn't even invest this. Not even showing investment growth. So clearly, saving the increases of our income can have a ridiculous impact on our ability to build wealth over time. Now, taking this financial principle, even if I were to add a moderate growth rate of, let's say, 5%, and then I add that to this model to see what the impact of investing would be, this person would have $3 million at the end of this 25 years. And they would have become a millionaire also in the year 16. So this blew my mind mostly because if someone didn't save the increase of their income and they just saved the 20% for 25 years, their income increased at the same pace, and let's say they did invest it, right? They invested money and they were able to get $1.6 million. That's still less than the cash flow that was saved from somebody that didn't invest their money at all. I mean, that's crazy. So the person that did control their living expenses, that did invest, would actually have the most amount of money because the effects of saving the increases, saving some of the increase, and then on top of that, getting an investment rate of return of, say, 5%, the effect of that would be over $3 million of net worth. I'm sure a lot of you could, that's a real tough position to be in, having $3 million. I hope this was helpful. Hope to see you next week. Enjoy the rest of your week. And hey, if you need more tips and tricks and you're looking for more information overall around financial topics, don't forget to listen to our podcast. It's called the Smarter Vet Financial Podcast. You can find us on any platform out there. We hope it's helpful. See you next time.